Hey everybody, Gary with Basecamp Trading. Let's take a look at value charts. Value charts is one of the tools that we have here at Basecamp Trading, and it kind of gives us an indication of when a market is either overcooked to the downside or to the upside. And this morning in the ES, we had this giant push down and we got way extended. You can see we hit significantly undervalued on our value charts right here. This is our 240-minute chart. We hit significantly undervalued. And we know that typically when we hit significantly undervalued, that one of three things are going to happen. We're going to pull back, we're going to go into consolidation, or we're going to reverse. Today, for the most part, we really reversed. Now, we didn't completely reverse and go up and make new highs, but you can see we pushed down and then left this giant bottoming tail. Price definitely reversed back to the upside. And typically what we get is a pullback in consolidation. But today we had a reversal here. And we had some things that were telling us that this was a possibility. We had hit significantly undervalued on our value chart on the 240 minute. We hit it 2 bars in a row on the 30 minute, and you can see we had this big bounce off the 30 minute as well. And again, we had a hint that a reversal was a slightly higher probability than just a pullback and consolidation. Because again, typically what we get is a pullback and consolidation when we get significantly undervalued. And if you look at our options chain on the SPX, you can see that today price was heavily skewed right up here in this 38.50 area. Now the SPX actually ended up closing a little higher than that, which we didn't completely anticipate. We were thinking this 38.50 would be a good spot for this to close, because you can see we had a lot of calls from 38.45 and above, and we had a pretty decent amount of puts from 38.50 and below. So that 38.50 to 38.45, if price were to finish there, that would mean that everything from 38.45 and above on the call side would expire worthless, and everything from 38.45 below on the put side would expire worthless. Well, earlier in the day on that big push down, the SPX was way down here. Well, we had thousands and thousands and thousands of puts in the money down there. And we know that the market makers are going to want to push price higher, get as many of these options on the put side and the call side to expire worthless as they possibly can. And you can see that from that 45 and up was going to take out the most call options. That would cause the most call options to expire worthless. And that 45 down would cause the most put options to expire worthless. Well, when the SPX was way down here, it made sense that price was going to bounce. Add to the fact that we were significantly undervalued on our value charts, both the 240s and the 30-minute, that even increased the probabilities that price was going to reverse back up into this area. Well, what that allowed us to do was take advantage of a very low risk opportunity actually in the SPY. SPY options are very inexpensive, and at that time the SPY was down in this 378 area. That's what the price on the SPY was, down here in this 378 area, and 379 calls at that time were selling for about 96 cents each. Well, that's a really low risk trade to bounce back. We're pretty sure, and we had good reason to believe based on the SPX option chain, and quite honestly, looking here at the SPY option chain too, there's a lot of calls up here and a lot of puts up here. Price ended up pushing a little higher. I was initially thinking somewhere in this 383 area, because right there we had 114,000 calls and above, and we were 147,000 puts and below. So that looked like a pretty good place for them to end up closing this out at. So if we were bouncing from 379 to 383 by the end of the day, that meant that that 379 call at the very least is going to be worth about $4. We paid less than $1 for it, or $96, and it was going to be worth more than $400, or around $400. So again, 96 cents times 100 is $96, $4 higher, $4 higher times 100 is $400. So it was a pretty low risk opportunity to make, a 3-to-1 risk reward, because again, that option at that time was selling for 96 cents or $96. And if it ran up to the 383 area that we were anticipating, now it ended up running a little higher. It ended up running as high as 384. That option, you can see, ended up finishing somewhere between 493 and 567. That's the bid ask. So it ended up finishing somewhere between there. But again, only paid $96 for it, and it's definitely worth more than $400 at this point. So we had our value charts that were telling us we were already extremely extended to the downside. We had our SPX option chain and our SPY option chain suggesting that price was going to ultimately, by the end of the day, finish higher. So at this point, it's reasonable to expect that price is going to come back. And again, it's a low risk trade. You're investing $96. If price ended up pushing lower, you could risk 50% of that, risk $45 per option, or risk the whole thing. That's a very low risk. Less than $100 per trade is very low risk for, a potential nice opportunity. As it turns out, this ended up playing out pretty well. So, just one other way that you can take advantage of some of the tools we have here at Basecamp Trading and trade something besides futures. Again, those of you who know me that know that I primarily trade futures. I don't really do much with options. But also, if you're in the room with us in the afternoons, you know that Monday, Wednesday, Friday, we pay close attention to the options chain. And if we get an opportunity like this, and it doesn't come along every options expiration, we don't get this type of an opportunity. But today we had a really nice setup, a really strong push to the downside. We got very extended. Our value charts were telling us that we were extended on the 240 and the 30, and we had an options chain suggesting that by the end of the day, price should finish higher. So that's a very low risk, high probability setup that we were able to take advantage of today.